Hey everyone, it's Nick with Us versus Herd. If it's your first time joining us, links are below in the description to our Discord and our free options trading group on Facebook. Today I made about $80, $86, though I'm not proud of it. Green is green, right? I didn't actually have a whole lot of time to trade today, and I missed the morning rally, which is really unfortunate because that's where all the action was. Options trading made about $50, which I'll go over some of my trades here, what went right, what went wrong. And then on futures trading made about $38, just kind of like scalped a couple points, didn't really do anything. After coming off a big loss yesterday and missing the morning rally here on futures, I just didn't get involved into the chop, as you can see here. Now, before we get into some of the trades, what I'm looking at, the charts and all that, I want to talk about Biden, his infrastructure plan, what that looks like, and kind of see what your thoughts are. So let me know your thoughts below in the comment section. If you could do me a big favor, hit the like button for the YouTube algo. Let me know if you made money today, lost money. You know, we're all in this together. I mean, Q1 2021 was a rough go, but that book is closed. Starting tomorrow, we'll be in Q2 2021. So hopefully we can have some greener pastures here and a little bit easier. You know, we've had red days, but the overall, it was tough trading. Overall tough trading. March in general was just tough. It was, the ups and downs, pings back and forth. Just tough. Anyways, Biden's unveiled his $2 trillion infrastructure plan. He's going to attempt to increase the tax rate to 28% from 21%. So currently we're at 21%. He wants to increase the corporate tax rate to 28%, which I think this is where the market is going to have an issue, because he's basically using the corporate tax to fund this over a period of 15 years. He's looking to revitalize America, or whatever he wants to call his infrastructure plan, within 8 years and fund it within 15 years. So obviously, whatever happens here, even if Biden gets a second term in office, the residuals are going to, be way beyond him being in office still. So kind of what the proposal is including is going to put $621 billion into transportation infrastructure, such as bridges, roads, public transit, ports, airports, electric vehicle development, which is good for the EV sector, obviously. Direct $400 billion care for elderly and disabled Americans. Inject more than, I don't really know what this means. What does this mean? How are they going to care? How are they going to use $400 billion to care for elderly and disabled Americans? I don't know. Beyond Social Security and all that, I'm not sure what that means. Inject more than $300 billion into improving drinking water infrastructure, Flint, Michigan. Put more than $300 billion into building and retrofitting affordable housing, along with constructing and upgrading schools. Invest $580 billion in American manufacturing, research and development, and job training efforts. So it's going to be interesting. Mitch McConnell said he's not likely to support the proposal of the tax increases. Biden called McConnell on Tuesday to brief him on the plan. Chuck Schumer, majority leader, touted the bill as a means to create jobs while promoting clean energy and transportation. So there's going to be friction on this plan, but obviously the Democrats are in control here in terms of expediting this process. So it's gonna be interesting. So if his tax plan is adopted, multinational companies will qualify for federal tax deductions based on payments to certain foreign governments. Biden wants to increase the minimum tax on U.S. corporations to 21%. So the minimum is going to be 21%. He wants to go up to 28%. So, and this was just like the phase one plan. In a few weeks, Biden said he's going to have the second half of his plan ready, which I don't know if it was ready or not. He just needed to say something. I don't know. But I think we should be okay. Obviously, I think the whole thing was, America's the richest country in the world. Obviously, like Yellen was saying, Janet Yellen, says, hey, corporations can afford this. Yes, they can. But how is this going to trickle down if they trickle down to everybody else using the products and services? Is it not? I mean, most likely they're going to come up with a way to tax that extra 7% onto the customer. They're not going to eat it because they have to perform for Wall Street, and Wall Street's saying, hey, why are you guys losing money? Why is this costing money? So what they're going to do is, hey, we're going to increase, Netflix is going to say, hey, we're going to increase it by X amount. Disney, blah, 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 Microsoft, everybody, they're going to say, hey, we're going to increase. And then everybody like you and me, and like, oh yeah, don't worry, middle class, lower class. I mean, if you make less than 400K, you're not going to be impacted. But you're going to be impacted because you're going to have all these companies raising rates and services, which is going to cost you more money, no matter what tax bracket you're in, whether you're rich, poor, everything in between, right? So I think right now, let's just be careful right now as this plan comes to fruition to see how the market reacts, not get too crazy. The NASDAQ today, again, came and tested up towards the 50-day moving average, got rejected. So tomorrow, are we going to get above this? I mean, it's been something that's been very painful for about a few weeks now. 3 weeks, almost 4 weeks, right? So we things fell apart for the NASDAQ when we came below. This orange line is the 50-day moving average. We tested, we came back above it, got slammed down 3 times back in mid-March, and then in a few weeks after that, or a couple days after that, tested again, smacked down hard, came down to 12,600. We've recovered, even though it's been a little bit of choppiness. We've recovered, and now we tested again and got smacked back out of place. So it's kind of interesting. S&Ps hit an all-time high today, then snapped back into place, kind of chilling right here. I mean, I think this is like the scary part. Like everything, like looking at NASDAQ, zooming in NASDAQ, I mean, just flat here, just rejection levels. So there's some heavy resistance here, and same with S&Ps. I mean, look, this is super, super flat here, right at 3960, 3960, 3970. I mean, it just doesn't want to push, doesn't want to push above that. The Dow reached a all-time high yesterday or 2 days ago, and has come down. And Russell actually has been trying to recover, but again, being held down like the NASDAQ right below the 50-day moving average. So I think that there's going to be some major resistance. There's a lot of people that are opposing Biden's infrastructure and tax plan. However, lobbyists gotta be able to focus on one direction. They're not sure. Should we lobby for the tax plan? Should we lobby for or against the infrastructure plan? What should we be against? And they can't spread themselves too thin. So it's going to be interesting how corporate America reacts to this. Microsoft had a really interesting day. So Microsoft, I mean, they were fading this hard. I mean, right at open, popped up to 236, 237, came all the way down to 234. And what made Microsoft pop all up to 239 is they got an army traffic, blah, blah, blah. They got a contract with the U.S. Army. Sorry, I can't talk right now. For $21.9 billion over the next 10 years. They're going to be producing more than 120,000 devices on its HoloLens augmented reality headset. And it comes a year and a half after Microsoft won the contract from the Pentagon worth $10 billion. So they are stacking some serious cash from the government. So if anything that I know about Microsoft is they fade these pops, right? And right now, Microsoft is stuck between 230, 240. So it's no surprise it got rejected here. It is stuck. We are stuck. And I just feel like we've been stuck for a while. We've been stuck all March long. We'll see what April brings, but it's potentially going to be some more chop. CHWY today. CHWY had amazing earnings, and that's where I took my biggest loss. Lost $208 here. I was selling a iron butterfly on it. And CHWY, I got a 610 credit, bought it back for 818. That's how I lost the 208, right? And ideally, I didn't think it, because they had such great earnings, I didn't think they were going to fade it this much. So my break even My break even was going to be 86 bucks. It came down to 88 area right down here this morning. I closed it out, and if I held on all the way till market close, it would have been profitable, right? Like just mapping this out here. Just check this out. So 80, I sold the 80s. I bought $10 wide, so I bought the 90 call, bought the 70. So this was going for 505 at close. I bought it back for 818, lost 200. I got a credit for 610, so I would have made $105 versus losing 208. But the problem was I didn't want to lose any more money on it. That's why I didn't help, because I could have lost another $200 on this trade, and I just didn't want to do that. It's way easier to recoup 200 than it is 400, and I would rather recoup, the 200 than the 400. But in this case, it would have been pay to wait. But the way CHWY was going, I was afraid that it was going to short squeeze and pop all the way up to like the 100 area. I mean, the day before, yesterday it was 80, closed at 80. Today it popped all the way up, and even pre-market hit 93, almost 94, came back down to 84. But I just didn't want to get squeezed here. I was like, I don't want to go max loss, and then I just cut the loss. So it is what it is. I mean, when you're trading earnings like that, selling premium, it's just a numbers game. So I lost 200 here. I'll make it back, and even today, like on ARKK, I made 166 bucks on ARK. Nice move back above 120. Sold off a little bit into close, but still looking very, very strong here for a potential 125 on ARKK. Netflix, I made $90. In Netflix, I was selling some premium, so when it dipped down to the 200-day, I sold the credit put spread. On Netflix, I was short the 495, long the 490. I put it on for $1.80 credit, bought it back for 90 cents, so we got 50% profit on that bad boy. So overall, like right now, I mean, my portfolio, I need to add to it a little bit, but I've been super, super conservative on how I've been moving about this market. And now April's here, so we'll see what the price action is going to bring, and we'll see what happens with Biden's plan. So if you watch this video to the end, comment watch to the end, and as always, stay safe, stay green. It's us versus herd.